forward. We're at 18,200 now for the Nifty futures. So it's a nice pickup from where we left it off on Friday after that staggering move of about 1.5%. The breadth of the market as well is in favor of the advances. It's Apollo Hospitals. It's a near about 9% uptick that the stock is seeing. Syngene, IRCTC, PI Industries and Hero MotoCorp, largely most of them being earnings reactions that are actually holding out. But clearly, Hero MotoCorp along with Apollo Hospitals, those are your star performers from within the large as well as the mid-cap universe. Let's take stock of another set of earnings. We've got with us the MD and CEO at Manappuram Finance, VP Nandakumar, joining in the show right now. Mr. Nandakumar, good morning. Great to have you on the show. As I see it that your consolidated profits have taken a bit of a hit, both on a year-on-year as well as sequential basis. Having said that, the NII has seen an uptake. Help us understand what really went by in the second quarter for you and what is the visibility on your profitability going forward.
See, we are coming back from the post-COVID situation. The one reason is the average AEM during the gold AEM during the second quarter has come down by 3%, whereas we have made up that during the last month. Actually, compared to the previous quarter closing, the AEM has grown almost by 14%. So that benefits will be available in the third quarter, fourth quarter, etc., etc. So gold has come back, new customer acquisition has come back, and for that we need to pay some additional. We need to incur some additional expenditure by way of increasing the employees compared to the previous quarter. Previous quarter, because of the COVID impact, we didn't have the required number of employees. We were able to bring them back, and also by paying them slightly higher incentive, we were able to achieve growth, particularly in gold loan, to the extent of almost 14%. And this is good for the future. So the borrowing rate has come down. So it is on the declining path. Or the marginal cost for the additional borrowing, it is steadily coming down. This all augur good for the future. So this is a temporary phase. In 1 or 2 quarters, we'll be able to bounce back in earnings also. We are steadily growing in all our businesses, particularly major business gold loan. We were able to showcase a growth of almost 14% during the second quarter. That augurs well for the company, and the coming quarters will be completely back. We are confident about that.
In the light of the fact that a lot of banks have access to low-cost deposit because of COVID, and you would be largely raising money from the markets through the bond issue, and cost of borrowing is going higher because of uptick in bond yields, how will your margins move?
See, our cost of borrowing is actually coming down. We had some long-term borrowing, that's the issue, but still our borrowing cost is coming down. It has gone down below 8% to 7.94%. For all new borrowings, it is 6.9 to 7% only. We have enough headroom for CP, raising CP also. Our CP level is very low. So our ALM is very comfortable. We plan to increase that to around 10%, 12% of our total borrowing, which is comfortable in the ALM front also. There is no problem. So all this will bring down the cost again. So when the banks are able to raise the cost, as you have mentioned, from the market through deposits, savings deposits, etc., in current account, etc., so the benefits are available to us also. So the margins, because of that, the reduction in the margin, if a slight reduction could be there, that will be adjusted with the increased growth, better leverage. Now, one of our problem is our leverage is low. We are slowly increasing that. The last month of the second quarter, middle of second quarter onwards, we were able to grow, and that growth is sustained. The benefits will accrue during the coming quarters.
Fair point. What is the real threat of fintech in the gold financing business? Because every major chain of borrowing and lending has got completely challenged. I don't see too many fintech players so far in gold financing. Could that be a challenge for you?
I don't think the fintech has much to play in gold loan. Whatever is there in the market, we also are doing. Like we are offering gold loan at doorsteps now. The facilities, technology, everything is available. Some of the fintech players, whatever they are able to do using technology. Now that sort of ability we also have gained through technology. So I don't think that will be a problem. I have seen some of these players, they are acting as BCs for some banks and getting these customers by sending messages, etc. So these customers take the gold, etc., to a bank, and the bank is lending. But in gold lending, the problem is the customers wanted instant redemption also. They are availing a loan, say 10,000 rupees to 20,000 rupees for 1 month, 2 months, etc. On a Saturday, they want these players will not be able to deliver that service because they are parking that in a bank. Customer will have to wait for 1 or 2 days. I don't think that will be acceptable to the mindset of these small borrowers who wanted to take some urgent money and redeem that as and when they get money, and they wanted the gold back immediately. So some cases they may get, I know that for some higher tickets they may get, but beyond a point, these fintech players, I don't see any role for them to play.
There has been a decent degree of rural prosperity this year, whether it is on the farm income side or also even in the way real estate is making a comeback. Does that translate for more business for you?
Definitely. That is what is seen towards the end of the second quarter, where we were able to grow at nearly 14% in gold loan. Other businesses also we are growing. So the decline in the profit is because of the employee cost going up, because the first quarter we were not able to get all the employees, etc. The second quarter we were able to bring them and that is resulting in growth, and through higher incentive during this COVID times, we were able to motivate. So that is sustained. So growth also will be there. So in spite of reduction in the gold loan portfolio during the first quarter and second quarter, we were able to grow nearly 14%. And this year itself, we are able to grow. We are confident to grow at a rate of over 20% from the closing AEM of last fiscal year. So we are able to, we are hopeful of delivering whatever we have been telling the market about growth and ROE.
Apart from gold loan, what is it that you can tell us, Mr. Nandakumar, about what's happening within the vehicle loan segment in specific?
So vehicle loan segment has already bounced back. The NPA level has come down. It is steadily declining. The collections in vehicle loans are now over 120% of the billing level. Means we are able to collect much more than the billing, etc., which are the ideas which has happened during the COVID times, etc., lockdown period, etc. And the dispersals also have come back. You can see we have grown in vehicle finance. we are able to disperse around 130, 150 crores now, which were more than the pre-COVID level. It has completely come. It has come back. The best segment, which was low, that is the only pull down factor now. Because those schools were closed, now those schools are they have started reopening. Now those schools and the other travelers also are increasing, so that segment also is coming back. So it is now with the prosperity, as you have mentioned, in the rural income, all the segments are expected to grow.
Urban India, Mr. Nandakumar, is seeing some great uptake in the residential sales demand. How has been your experience, though, when it comes to your home loan book? What are the asset quality trends and, more importantly, the collection efficiencies that you foresee going forward?
So the collection efficiency there also is improving. So we have repossessed some assets where the customers were not able to repay. Many of them have voluntarily surrendered, etc. We were not able to find a buyer, but from this quarter onwards, what we see is there is a demand there also. This will help us to bring down the NPA there. And slowly, with the rural income increasing, going up, the demand also in the affordable housing segment is seeing an upstick. So that is also good for that's good for the industry. So overall, we hope the things are completely back.
Okay, Mr. Nandakumar, great to have you on the show. Thank you so much for taking the time out.
Welcome. Thank you.